The decision on making an investment should not be treated only with a short-lived enthusiasm. Rather, it must be dealt with precise analyses and a constant fervor for growth. But when economic instability occurs and the stock market gets affected, it is only normal for investors to feel the discouragement seeping in when they learn that their decision has caused them to lose money. Thus, to minimize the pangs of guilt and financial losses, investors will diversify their assets. Aside from investing in businesses, oil and real estate, they will also choose to make gold as investment in order to make theirs a win-win situation. Why is gold a good investment? And how can an investor gain from it? The answer lies within gold's intrinsic value. Because of this, its value or purchasing power, which is definitely high, stays the same no matter what happens. To make things clearer, let's compare it to a dollar and the items that it could buy. Years back, an ounce of gold would have been priced $100. Years back, $100 would have bought you a year's supply of groceries. Now, gold costs more than 10 times the amount it cost before, about more than $1,000, while $100 would hardly be enough to buy a month's supply of food items today. To say that gold's value becomes higher as years pass would be somewhat wrong. Saying that the dollar's value is getting lower as years pass is more akin to the real picture. Actually, it's not just the dollar that has depreciated ever since the US government allowed printing presses to print money. Other currencies have suffered the same fate as well as a result of inflation. Thus countries, and not only depositors from all over the world, have made gold as investment to safeguard their economy from rapid declines whenever the world market staggers. And since so many people have realized the importance of gold and the way it can help one steer away from financial decline, the supply of gold has started to diminish. If there are any investors who still haven't bought enough of this precious metal, they surely need to act fast. Albeit its strength, gold also experiences a few dips now and then. This happens when the currency's value rises or the market reaches an all-time high. But this isn't anything you should worry about largely. Gold is a very much needed commodity, especially in first world countries. Aside from jewelry, it's used in many industries and even in food. Hence, it is and will always be regarded indispensable. Your investment in gold won't go to waste. And as long as you have diversified assets and don't rely largely on gold, your finances won't get jeopardized. Succeeding in all your investments is all about proper timing and accurate analysis. It does not rely on luck. A rather sharp intuition would be much more useful. If you choose to make gold as investment, you need to make proper decisions, too, and not rely solely on its purchasing power.